Hello and welcome to the Let's Talk Tax podcast, brought to you by Mazar UK. I'm your host, Lucy Redding, and I'd like to thank you for joining me and my special guests as we discuss the current business issues through the lens of tax. I should just like to manage expectations at this moment and say that while we're all tax specialists on today's podcast, this is not going to be a heavy technical update or presentation. Rather, a thought-provoking exploration of today's top business issues with a distinctly tax flavour. And talking of delicious things, we've decided on a virtual dinner party format for today's podcast. We're all looking for new and interesting ways to get together at the moment, so this seemed like the perfect theme. And let's face it, who doesn't want to talk tax at a dinner party? The topic for tonight's over-dinner conversation is the pandemic. It's impacted all businesses and all individuals in very different ways. And we've had 12 months of responding to what the pandemic has thrown at us all. But now we have a roadmap through the easing of COVID restrictions. So most businesses are starting to develop plans for how they will bring their workforce back into the business over the next 6 months, as well as considering the requirements of their workforce for the future. Joining me for dinner today is Glen Huxter, Senior Employment Tax Specialist with over 30 years of experience of advising employers on workforce matters. Clive Fathers, partner who leads our specialist tax services and whose own expertise is in reward, social security and internationally mobile employees. Aude Delechat-Patel, head of our corporate tax disputes and a leading tax advisor to businesses on corporate tax governance. My area of expertise is corporate tax, and I've been advising large companies, including international and listed businesses, on tax matters for over 20 years. Hi, everyone.
Hi, Lucy.
Hi, Lucy.
Hello, Lucy.
So you've all very kindly agreed to bring a course for dinner with you. So what's on the menu today? Glen, what's for starters?
I guess for starters, we'll be looking over the next 6 months, which will be about bringing employees back from furlough. And in that, we'll be looking at who and when employees bring back. And to season it, we'll also think about the impact of the new off-payroll working legislation.
We're following that, Lucy, with a lip-smacking main menu, a la carte selection of reward options for everyone to consider. So we'll be comparing and contrasting some of the old school types of menus that employers would provide and employees would select from, and looking at what new recipes we should consider as we move out of the post-COVID world.
And last but not least, we will look into dessert. So we will be discussing tax governance and why now businesses should be spending time to focus on this important topic.
Well, that's a really tasty sounding dinner. I can't wait. So let's get tucked into our starter then. The coronavirus job retention scheme has been the government's life support measure for businesses throughout the pandemic. Glen, as we're talking today, we've heard the government's roadmap plans for the gradual easing of lockdown restrictions, and we've had the Chancellor's budget on the 3rd of March. So 2 questions that I have. What do we know now about how long the job retention scheme will last for? And what do employers need to be thinking about as they bring their people back into the workplace?
Yeah, thanks, Lucy. And they're really good questions. And when thinking about the CJRS scheme, employers need to be thinking about already who they're going to bring back and when they're going to bring those employees back. So looking at those in a little bit more detail, CJRS scheme, it was announced that it's going to run up until the 30th of September. So that's going to allow businesses to prepare a bit more time thinking of who and when to bring back. And when they're thinking about who they bring back, are they thinking about vaccinated employees, employees who perhaps have long distance commutes or commute on public transport, thinking about high risk groups, and also making use of the flexible furlough? And what we've seen on this is that a number of business sectors have been impacted differently. So the effect on the hospitality and the retail sectors, they've been the hardest hit. And with the hospitality sector, the staggered return is really going to focus their businesses on who they bring back and when. And some of the other aspects to think about are around bringing back people is the gender pay gap consequences. There's been lots of reports in the press recently that CJRS and furloughing workers has had a bigger impact on women than it has men. And especially because it's been reported that women have been the primary carers for homeschooling as well. And obviously that's eased now with children going back to school. But, some of the other reports that I've been reading are that, women could be held back in the workplace because they've been out of work, or sort of not out of work, but they've been on furlough longer and perhaps not working as much as their male compatriots.
Yeah, I think that's a really good point, Glenn, and something that employers will really need to think about strategically as they're bringing people back into the business, thinking about who've been on furlough, and particularly focus on females who've been on furlough, because there's certainly a growing body of research that suggests that more females than males may have certainly taken voluntary furlough, particularly as homeschooling kicked in again. I saw some statistics that suggested that 70% of women did all of the homeschooling, 20% of women took a reduction in hours to facilitate that, and 33% of women feel as though they're at a disadvantage compared to their partners who didn't have to kind of step back to do the homeschooling. So it's going to be really important to think about how you bring those people back into the workforce, how you get them back up to speed with just the way we do business now. If they've not been in the business, and I've certainly had clients who, when people left, they were predominantly having face-to-face meetings in the office. Over the last year, that's now evolved to predominantly, exclusively almost Teams-based meetings. So if someone's not been in the business for that period of time, they will feel much more uncomfortable. If you cast your mind back to how we felt on those initial meetings, and we've got some great video outtakes of where the handovers haven't gone quite as well as they would now that we're all used to it. It'd be really important to give people time to get to grips with the new technology and the new way of doing business. And also, it's going to be really important to think about the fact that when you are giving out new projects, you need to be really mindful of the fact that you don't just give it to the person you gave it the last project to, because they'll be fully up to speed. I've certainly got clients who they're proactively thinking about those projects as they're coming in. And even though it takes slightly longer to kind of transition the work and do the project initially, making sure that people on furlough are involved in those projects so that they can get back up to speed as soon as possible. Otherwise, inadvertently, when it comes to things like pay reviews, bonuses, promotions, it will be those people who've been in the business who will be at an unfair advantage. And as we've identified, women have probably shouldered quite a heavy burden in terms of stepping back from their career in the short term to help with homeschooling and other caring arrangements as well. It's not just homeschooling. It's going to be really important to ensure that you've got that transparency and that challenge in the business. Otherwise, all the great work companies have been doing in terms of gender pay gap and trying to get those closer across the business, that could be undone pretty rapidly over the next year to 18 months. And I know, Aude, you kind of compared it to an experience when you were coming back to work after maternity leave.
Indeed, Clive. It reminds me when I came back from maternity leave, and I came back twice. It's fair to say that unlike many other mothers, my returns were smooth. And I think that was due to two factors. First, the ongoing communication between my employer and me before going back to work and during my time on mat leave, as well as the preparation for my return done by my employer prior to my returns. Those two elements really help me greatly going back to work smoothly.
Yeah, and I think you both made some really good points there, and so much has changed in the workplace over the last year. And as you mentioned, Clive, some of the simple things such as Teams meetings. You go back 12 months, were we comfortable video conferencing each other? Probably not. Now, those of us who are doing it just feels second nature. And some sectors will need to think about, the adjustments to the workplace. So, is there PPE? Dual screens, and need to think about distancing. And those returning to the office are perhaps going to have to adjust their mindset when they go back to the office to how they were operating previously. And I think it's really important that people connect with each other when coming back to get that upskill as quickly as possible so that everyone fits back into the workplace and we're all as productive as possible and as soon as possible.
Lots of things to think about there, isn't there? Many of our clients at Mazar have really large workforces. Are they looking for help with these kinds of challenges?
Yeah, Lisa, I mean, we're helping lots of clients deal with these kinds of issues around the return to work and thinking about the wider impacts of the pandemic. We're also working alongside our business consulting colleagues on this, and we're helping navigate the uncertainty where the businesses are thinking about how and who they're bringing back and what those options are.
The point that was made earlier about potential gender pay consequences, that's really interesting. What can businesses do about that, though?
Yeah, so the gender pay reporting was really brought into focus primarily with the impact of the pandemic on the workforce. And it's to reassess strategy in improving gender pay equality. And a recent announcement is that the reporting has been pushed back by 6 months. So that will no doubt help businesses, give them a little bit more breathing space and thinking about preparing their reports and being able to explain why perhaps there's a change in the current picture as to what they've been thinking. And a particular section of the workforce that have been furloughed other than others, that could cause disparity in the reporting, and employers will need to bear that in mind.
But talking of delays, this time last year, businesses were busy preparing for the new off-payroll working legislation to come into effect. For some sectors, this was going to have a massive impact. And then, because of the pandemic, the government decided to postpone its introduction. Where are things at with this now, Glenn?
Yeah, so the effective date for the off-payroll working rules is now 6th of April 2021, being postponed from April last year. And a recent study or a survey that's been undertaken in quarter one of 2021 has shown that of 2,000 businesses, more than half of them were expecting to recruit in quarter one of 2021. So that's great news for the economy, but it remains to be seen as to which context that recruitment is going to be hired. Are we going to see a move back to off-payroll contractors? And I've seen a recent report and survey undertaken by HMRC that's shown that agencies are actually showing that there had been a decline in the personal service company contractors. You want to be thinking about when you're bringing back people, are you going to bring them back as contractors? Are you going to bring them back as agency workers? Are we going to see the increased use of umbrella companies? And that's certainly something that's been talked about recently. And one of the things to think about the umbrella companies is what we see is that there's a promise of higher take-home pay than if they were a worker was employed. And, that's one of the key things to be aware of, because it just doesn't happen unless it's something that might be a little bit aggressive in the tax avoidance arena. And one of the other things we might see, but there's a reputational risk to it, is the introduction or the bring back of 0-hour contracts. Again, it might allow businesses to have that flexibility, especially over the next 6 months or so, when they're still a little bit unsure as to, whilst there's no plans for another lockdown, but potentially it could happen. You don't want to be starting committing yourself to expenditure which you may not be able to afford, or the business could afford, over the coming months.
Maybe it's my background as a lawyer, but I was intrigued by the recent Supreme Court decision in the Uber case and how that decision will have wide implications for businesses, Glenn.
Yeah, Aude, and another great point there that's raised. And I think the Uber case has highlighted that for employment status, for tax and ICs, you're either employed or self-employed. But for employment law purposes, whilst you could be an employee or a self-employed contractor, we now have this middle ground where you have somebody who might be taxed and national insurance for self-employment type relationship, but they're actually entitled to employment rights such as national minimum wage, working time regulations, holiday pay, sick pay. And one of the things we've seen is that courier businesses, there's been a big rise in the use of off-payroll contractors there. So when we're looking at all this, we're also thinking about, or employers might be thinking about, is how do they reward those contractors, those workers that they're bringing back? When they're looking at pay packages, you think about, as an employee, how is that going to impact or compare if you bring back off-payroll workers?
That's great, Glenn. And I think that probably takes us very nicely onto our main course of employee reward and incentivisation. So, Clive, why is this a really important topic, particularly at this point in time?
I think what we've seen over the last 12 months as we've been in lockdown is that it's really challenged our thinking on what a reward package should look, sound and feel like, and what the components of it should be. And without trying to stretch the analogy too far, it does remind me of how we've seen menus in restaurants evolve over the last 3 or 4 years. So typically it would be, if there were 10 dishes on the menu, that you might get 8 big meaty dishes, maybe 1 fish option and 1 vegetarian or vegan option. And now we're seeing menus much more varied. And I think as employees go back to work, as well as those kind of big meaty benefits, such as things like company cars and season ticket loans, which we can talk a bit more about in a minute, I think people will want those different types of dishes. And in my mind, I've kind of slotted them into 3 types of well-being. So there's physical well-being benefits, ethical well-being, and mental well-being benefits. In that first category of physical well-being, are we going to see more people, if they're not commuting in their car or on public transport, they'll have more time perhaps to go to the gym or to cycle, or cycle to work even if they want to avoid public transport. So those benefits that can help an employee's physical well-being, such as gym membership, such as cycling to work, I can see those benefits becoming more and more attractive. And a lot of people, their main anxiety around returning to the office is the fact that they'll have to go on public transport again. There's some pretty funky electric bikes out there now that you could use your bikes to work scheme to take advantage of. That second category around ethics, more and more we're challenging ourselves about what we do, what we invest in, and the impact that has around us. It's been really interesting there's an initial public offering out at the moment, and some big investors have said no, they're not going to invest in that because of the way they perceive that they treat their workers. So I think increasingly employees will want reassurance and the ability to invest in things like pensions and ISAs, which actually match with their ethics and what's important to them in their life. So if an employer, I think an employer could be a real advantage. I think they'll be ahead of the curve on this point if they can start to put together a suite of those investment benefits that really enable an employee to feel as though they're investing and doing good for the planet. I think that could be a massive advantage. And it's also really worth rethinking, those old-fashioned kind of meaty benefits. I think there's still room for things like season ticket loans and company cars, but we need to look at it differently and challenge the way we think about it. So you can give an employee up to £10,000 as an interest-free loan. Typically, that's being used for season tickets. Obviously, you need to manage the risk to the business, but it's worth thinking about whether you could make that facility open to people and maybe to help them get a foot on the property ladder or something like that.
Yeah, absolutely. And I'm thinking about our clients with really large workforces again and wondering how they tackle this. Have we been helping businesses to structure their reward packages for their workforce?
Yeah, one of the really interesting areas at the moment, and it kind of ties in with this ethical element and how can we invest in a way that is good for the environment. Almost every business is thinking about how they can cut their CO2 emissions at the moment. And introducing things like electric company car fleets is a really innovative way of doing that. And also, as we've seen before, the government are introducing tax benefits. So, gosh, I can remember when there was actually incentive to drive more company miles. Do you remember that, Lucy?
Yeah. It was quite a few years ago now, wasn't it? I remember my colleagues being really busy advising businesses on kind of, re-looking at their whole employee car schemes and revamping those. I guess It was a legislative change back then that kind of drove that behaviour. Now it feels like there's a number of external factors that things like sustainability, technology, the pandemic, that is making this now a really good time for employers to, again, kind of whole scale think about that employee car scheme.
You're absolutely right. I think it was a really great example of where government policy and tax law changes really drove a different type of behaviour. So we saw companies going from, or individuals going from, doing as many circuits as the M25 as they could at the end of the year to make sure they got off over the next tax threshold, to actually thinking about the CO2 emissions as that started to influence the tax charge on your company car. And now there's some incredible benefits if you've got an electric car, and an electric car fleet could save both the employer and the employee a huge amount of money.
Yeah, that's a good point, Clive. And we're seeing a lot of businesses review their car fleets already. And there's been recent announcements. I mean, JLR have said they're committed to producing only electric cars from 2025, and Ford and Volvo have also made similar announcements recently. So I think when you sit back, you just have to pinch yourself that for the JLR piece, that's only 4 years away as it is, or if you think about it, perhaps roughly one car lease term. Some of the other things we're seeing as well is that large distribution businesses are reviewing their van fleets, and they're actually looking for like city centre, town centre deliveries of moving to smaller electric vans rather than the big vans. We are seeing a big change that started to happen already, and it's only going to move faster as we progress towards the all-electric vehicles.
Yeah, thanks, Glenn. It's really important, actually. When you put it in that context, it's only one lease away. Brings it a lot closer to the front of your mind than it would otherwise do. And it's absolutely essential that employers are planning that far ahead as they're looking at their benefits and how they're going to evolve. I think the other area that I'd just briefly like to touch on is that third element of well-being that I mentioned at the beginning, which is mental well-being. Don't think any of us can say that the last 12 months working from home hasn't created mental well-being challenges, which would be really great if employers could support employees with, as we hopefully return to some kind of normal in the not too distant future. Part of the challenge at the moment, of course, is those forward-thinking employers who do want to include a suite of benefits that address mental well-being. They're faced with a big tax charge on that. So I've seen quite a few employers introduce things like mindfulness in the office, yoga sessions, Pilates, which is all fantastic in terms of mental well-being. The challenge for the employer is, at the moment, those types of benefits generate a tax charge. So if you want to provide those benefits, if you put the benefits on your PAYE settlement agreement or PSA, then you're facing a tax charge, around 80% to provide that benefit. So wouldn't it be fantastic if the government, as part of their initiatives, came up with some ideas and some mental well-being activities that could actually be delivered to employees free of tax? That would be a huge step forward.
I've heard a lot of people talking about wanting to keep the benefits of working from home when we fully emerge from the lockdown restrictions. This hybrid model of some days working from home and some days working in the office is very attractive to a lot of people. But what would be the challenges for this hybrid model, Clive?
Yeah, that's a really topical point, isn't it? Or as you say, increasingly I'm in conversations with clients and I'm hearing the words hybrid model. I think it will become part of our vocabulary in the same way as social distancing has in the last 12 months. And certainly employers need to, again, think about what if you are allowing people that flexibility, which I think is fantastic. It certainly can help with mental well-being as well, I think. What's the tax treatment of second screens? If you want to buy people a chair, a proper business chair for at home, and when people are in work, we have posture training to ensure people are sitting in the right position. How do you introduce that if people are working from home? So lots of different things for employers to think about, and I think that's why it's going to be really interesting area over the next 12 months or so.
Yeah, and this reminds me of another area that we're seeing a lot of client queries coming in on, and that's where we've got employees or new hires that are working for UK businesses but are physically located in another country.
Yeah, I'm honestly receiving probably one query a week on this at the moment. I had a brilliant example a couple of weeks back where a client phoned up and said, we found a fantastic new technical guy for our role. We're looking to double every year for the next 5 years. This person could be key. So that sounds fantastic. Yeah, the challenge is they're in Portugal. Why is that a challenge? Well, we don't have any operations in Portugal. Okay. So employers, I think viewing, and certainly from their perspective, they see the advantages of having a global talent pool far outweighing the additional administrative cost of setting things up. There is an administrative cost. It can be kind of hard costs in terms of the extra payroll and structuring requirements for the company potentially, as well as potentially additional costs in things like social security and extra taxes. So it's an area that I can definitely, well, we're already seeing traction on the ground.
And we were talking about one such example this morning, weren't we, Clive, actually? And some of my other employment tax colleagues are also kind of referring these queries to me as well, because they're recognising that businesses having people in overseas territories can also create corporation tax obligations for the business in that territory. And this is known as a permanent establishment. And these obligations can be both onerous and costly for businesses, particularly if they're falling into them without knowing so.
Yeah, really it's going to be so important for employers to think about how they model their policy and what type of employer-employee relationships they have. It's about those employers who really embrace it and who push the boundaries are going to really enhance their brand in the marketplace. To be really successful at doing it, they also need to manage the risks around that, so their corporate risk, which I think might be a little taster of the dessert that's yet to come.
Yeah, Clive, I think with clean plates all around, it probably is time to move on to our dessert. And I hope everybody has saved room for dessert. This is my favourite part of any meal, so I definitely have, Aude.
Thank you very much.
We've been talking about the pandemic and the impact on the workforce going forward. So how is tax governance connected to this? Well, first of all, I'm fascinated by everything you've said today, team. And governance underlines it all. And then tax governance does as well. And it's completely part of it. And I think now it's an adequate moment for businesses to take stock of what happened last year and the impacts the pandemic had. For example, if businesses have opted to benefit from the CGRS scheme, I would invite them to revisit their documentation and make sure they have clearly unveiled the reason why, how, and who has been benefiting from that scheme.
Yeah, that's right. Or HMRC, they've released a list of 750,000 employers who've claimed under the CGRS scheme. So they have visual in real time of who's claimed what. And I just think that it's absolutely key that employers have got that governance in place in anticipation of an HMRC review.
What you say is very important. It reminds me the things you might want to put in place now, the inquiries you may face in the future regarding CGRS. The legislation was adopted in haste and equally implemented by businesses in haste. The main objective of businesses was then to stay alive and protect their workforce. The CGRS legislation is complex. There may have been mistakes or error made. Therefore, a good point to start is to ensure businesses have documented the why and the how they've implemented CGRS, so that they do have answers for when HMRCs come knocking. The government has injected a lot of money to ensure the economy stays afloat and people do not lose their jobs. In return, the government expects businesses to be responsible corporate taxpayers who play by the rules and do not abuse the system. We do expect ferocious scrutiny from HMRC on this front. That would be the time to address these and correct these, as well as mentioning the return to work, mitigating the risk of penalties and bad press around the administration of CGRS and IR35.
And we've been doing a lot of work with our large clients for the IR35 and off-payroll workers, and that's all around the governance. So that's documenting their controls and processes and making sure that they've got robust procedures in place that stand up to HMRC scrutiny. And I think that's one way where HMRC come in and they look at this. They'll look at the governance, they'll look at the documentation, they'll look at the controls, the processes and the procedures. And if it's not robust enough, they could deem that reasonable care is not being taken. And at the end of the day, the end client is held responsible for the tax and NICs that are due.
You're right. I think we expect that HMRC would be reasonable in their circumstances. They would be willing to help businesses navigate this new system. They have confirmed that they will take a light touch approach to IR35 reviews in the first year. That said, before the pandemic, we could see that the large businesses were held accountable to a high level, and the pandemic has only enhanced this fact. Transparency is the norm in tax. And so now more than ever, and then increasingly, once the COVID-19 episode finishes, it will finish. Corporates will have to achieve an equilibrium between, on the one hand, standing up to ferocious scrutiny from the tax authorities, and on the other hand, the need for these businesses to do their fair share, to be seen as an integral part of the society. And that starts by paying the right amount of tax and be tax compliant. We can help businesses, and we do help them on both fronts. And being prepared and being upfront are key attributes. So good tax governance is the tool which will help striking this balance. And it is a tool which is also used by the tax authority to keep businesses accountable and verify that they are doing their part in adding value to the community they operate in.
Okay, so what does good governance look like?
Well, it's a very good question, because in practice, exactly, the theory, you grasp it, you understand what it means and what it's for. So in the UK, for example, there's a few elements I would like to touch upon today. So businesses ought to keep the elements we've discussed today in mind, for example, while preparing the publication of their annual tax strategy. So an element businesses sometimes seems to forget while drafting their tax strategy is to take credit where credit is due when they have done things right. So, for example, during the year, when they have had their people's mental health well-being at the forefront of their mind, do not shy away from saying so and being proud of that. Make sure also that your tax strategy aligns with the overall strategy of the business. Remember that the way you approach your tax affairs and the issues you face now and arising from the pandemic need to be consistent with the published tax strategy. Another element is the business risk review. So I think businesses that are due to have their meeting with a customer compliance manager this year to go through their business risk review and be given a risk rating at the end of it. I would encourage, I always encourage a frank and transparent discussion between the business and their CCM during that business risk review. Let's not forget that it is the time for the business to ask questions, to also ask guidance as well, because the past year has been a novelty to us all. That is an element that I think it's important to pass on, and the message is important to pass on to businesses. Another tax governance element I'd like to touch upon is the senior accounting officer, which is obviously linked to business risk review. So just make sure that the businesses and the companies that are large enough to fall within this regime have maintained that the control and processes for tax accounting which are in place are fit for purpose. Finally, the last tax governance items I'd like to talk about today is corporate criminal offence. I think it's important for two reasons. The pandemic and its impact may actually have triggered an update on the risk assessments for corporate criminal offence purposes, because the risk may have changed. So therefore, their prevention procedures also need to be revisited to make sure that they are appropriate and reasonable in the circumstances and vis-a-vis the apparent risk that may come out of the risk assessment. Also, at the back of the year they've had, businesses may be thinking about exit strategy or acquisition. And for this reason, being compliant on the CCO front would be crucial to be able to pass due diligence. So I think those are the elements for tax governance that comes to mind, and that really I would encourage business to think about. And we're helping a lot of clients at the moment thinking about those issues and helping them get into good governance.
Yeah, that's really interesting, Aude. And as you know, like employment tax is my passion. And what we're seeing is we want to make it as easy as possible for employers to engage a flexible workforce. But then there are measures that can have an impact on that. And lots of businesses, they're not quite sure how quickly the economy is going to bounce back. So they're looking for a flexible workforce they can benefit, to turn on and turn off the resources as and when they need. But obviously, we think that makes the governance a lot more difficult. And, we're seeing lots of scenarios where it's completely legitimate for a business to adopt a particular structure with their workforce and the way they're operating today, and it'll still be effective going forwards. And it's all about getting that balance right. Or is that something that you agree with?
I concur, Glenn. It always goes back to the commercial rationale. We justify all the decisions the business is making. Everybody has a role to play, and everybody should be playing by the rules. So it's naturally linking to governance. Why you do what you do, it would help, but it will help put in place the short-term, medium-term, and long-term growth strategy for the business, and making sure that all these elements of good governance are aligned, and tax governance is an integral part of it.
I think the pandemic will change working practices for all sectors to some extent for the long term. It's like all catastrophic events. It kind of breaks habits. It allows a reset, and it makes us all realise there are other, perhaps even better ways of working. So let's just take that example again of employing somebody overseas, like a remote worker. That may not have been something a business would have considered pre-pandemic, but now they are. So my message to them is, it's absolutely fantastic to look at new ways of working that supports both the business and the employee, but don't accidentally fall into some of the wider tax traps. You need to go into these things with your eyes open and take proper advice to ensure you've covered all tax aspects.
Yes, Lucy, absolutely. And that's because, as you and Clive said earlier, there's not only the employment tax consideration here of employing somebody overseas, there could also be broader tax implication. This is just one specific example when we mention residency, for example, and there'll be others out there where in dealing with businesses issue, you need to take a holistic approach to considering the tax implication, and good tax governance will support you in achieving this.
Well, this has been a really enjoyable dinner. Just to continue the dinner party theme a little longer, this was really just a taster. There are clearly lots of areas we could have covered today, so please do get in touch with myself or any of my guests if you would like to discuss aspects relating to either the workforce or tax governance. This brings the first episode of the Let's Talk Tax podcast series with Mazars to a close. I'd like to thank my guests, Glen Huxter, Clive Fathers, Aude Delechat-Patel, for their delicious courses. I hope you, the listeners, have also enjoyed our virtual dinner party too. If so, please subscribe to the series and leave a review. This will really help to extend our reach to the tax and business communities so that we can continue to share our knowledge and expertise on a variety of topics. If you would like to know more about the topics we've discussed in this podcast, or if you have any specific topics in mind that you'd like us to cover in future shows, our contact details are provided in the show notes, as well as a link to our website. Join us for our next episode, where we will be discussing Brexit. Now that it is done, what are the tax implications? But for now, thank you for listening and tune in next time.